Good afternoon, everyone, and thank you for joining me. This is the US Open webinar. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Tuesday, the 11th of Jan, 2022. Just going to bring up our high-risk investment warning, and I'll leave this on screen for a few moments. Hey, Jazz. Nice to have you on the webinar. Happy New Year to you, and welcome. Thank you very much for joining. Let's just take a look at the market commentaries disclaimer. Keep this on screen for a few moments as well. All right, and references. So we'll look at Market Scope 2.0, forexfactory.com. I want to bring up Forex Factory because I want to do a I want to put on a scalp today if I could. Hey Rob, yeah. So this is the conundrum. So Rob's just written that he's looking forward to the scalping strategy, and we'll put on a scalp, but we're actually in a bit of a it's a tough time to be scalping, particularly today, because if we go through to the Forex Factory, all right, in the next 25 minutes or so, we're going to see this testimony starting. So this is probably going to introduce some volatility that would be absent if it wasn't taking place. And this could, of course, impact on the scalp. So we will put on the scalp because we'll go through the methodology. We must expect the fact that there is likely to be volatility. And because of that, we'll do it again tomorrow. And it's also important for me to say we're going to do this on a demo account. Okay, so there's no ways I would do this right now on a live account. It's just too dicey. So we'll do it on a demo account, but just be aware that this could obviously affect the outcome of the scalp. And this is so what effectively is happening here. So Jerome Powell has been, we all know he's been renominated as the Fed chair, and now he's effectively going to be endorsed or ratified by the Senate Banking Committee, and they're always going to ask these probing questions, and the questions, in my opinion, are going to really center around inflation and how the Fed is going to deal with that, because the Fed has to deal with it. The Fed has a mandate. It's a dual mandate. Not all central banks have dual mandates, but the Fed does. But one of the mandates, and this is common amongst all the central banks, is price stability. So price stability is effectively dealing with inflation. Okay, so I think that's probably what's going to be take up a large part of the proceedings. Just before we even look at the charts, my opinion is, assuming that the Fed chair comes across hawkish in tone, which is what I am expecting, but you never know, right? It should, one would expect, be dollar supported, but it probably impacts negatively on the stock market, one would think. But again, that's all, it's all supposition. I'm not sure that's the way it's going to go. So let's just keep that in mind. And that's why I wanted to reference Forex Factory. So let's go ahead and bring up the chart at the, and then let's discuss the strategy, and then we'll see if we can put something on, and we'll just see how it progresses. So what we'll do is we'll start off with the let's start off with the S&P 500, and it's also worth mentioning, by the way, and we have touched on this previously, that scalping at market open is generally, in my opinion, not a good idea, because the market hasn't settled. You've got no real got no real direction sense then, because your algos are kicking in, your limit orders are kicking in. It's just so it's quite time-wise. It's difficult to kind of plan the appropriate time. Nevertheless, I think today in particular has just that added complexity. So what we're going to do is we're going to just start off with the daily chart, yeah, and we can see that as we're talking, actually the market is pushing into the bearish area. Let's just take a look at US 30 and just take a look at NASDAQ. NASDAQ would be the most bearish, I would expect. No, it's not. Okay. All right. Let's go through to the US 30, and we'll build on the sort of the theory. I'll tell you what we're kind of looking at. History with regards to this methodology, it was developed in the US Open. I think that it's looking quite different now to the way we started it, and we just try to build this thing together, and suggestions were made, and I think we've got something fairly workable now. But of course, if you guys see any improvements, you know, it's certainly an invitation to present them. So what we've got here at the bottom, the filter on the daily chart. Okay, the filter on the daily chart is actually the oscillator. It's not the position of the candlesticks. It's the oscillator. So what is this oscillator? This oscillator is a fast stochastic. That's what it is. It's a fast stochastic, and not only is it a fast stochastic, it's raw. This is raw momentum. The stochastic generally is two lines. You can see we've only got one here, right? So which line is being hidden? And it's this %D that's being hidden. Okay, the %D, you can see here I've put it as with no line. If I add back the line, okay, you'll see it. I don't want it. I don't want to see it. I want to take it out. Okay, and the reason is because that %D is it's a slowing factor. It's effectively applying a moving average to the %K, which is the %K is effectively a, in my opinion, a really good and very simple equation. It's effectively the I've gone blank. It's close. Okay, it's close minus low over high minus low. That's the equation. We won't get too much into it now, but the point is we're looking at raw momentum over 5 trading days, so over a week of trading, and we want to see the direction of the unfiltered %K. And what we are really looking at here, just to explain it so that I think the simplest terms, let me bring up my, let me bring this up here, and let me just get rid of all of this. Remember, we're looking at it raw. There's no slowing factor. That's very important. So effectively, we're looking over 5 trading days. Okay, we're looking over 5 trading days. And what remember the formula is close minus low over high minus low. Okay, so let's just put that in. So here's the range, high. I think we are doing the formula. I think I said I wasn't going to do it, but we will. And let's just put in the close. Okay. We don't need an open. Okay. Usually on a bar chart, the open is on this side, isn't it? We don't need it for this particular. So what we're looking at is we're looking at the position of the close relative to the low against the high relative to the low. So effectively, think about it this way, okay? If I put the high over here, so sorry, if I put the close at the high, then effectively what we've got is high minus low over high minus low, because C would equal H. Does everyone understand that? I know I'm speaking sort of in algebraic terms, but if the close equals, let me just write this down. So we've got C minus L over H minus L, okay? So if we've got C equal to H, then it would be the same as saying H minus L over H minus L. Well, what's H minus L over H minus L? It must be 1, right? It must be 1, assuming everything's greater than 0. So it must be 1. In other words, 100%. You guys with me on that? In other words, what we're measuring is we're measuring the percent of where the close is relative to the range. Okay. Now, because we're so close to the price action, we're doing it over 5 periods as opposed to 10, 15 periods. We usually when we do like a swing analysis, we're usually looking at 5 trading at 15 trading periods. Here we're going right into 5. We want to see which way the close is traveling. That's effectively, so if I'm confusing anyone, you must let me know. Okay, but we really want to see which way the close is traveling. Okay, is close, let me try and just, there we go. Is close moving upwards or is close moving downwards? We're trying to catch the momentum. Remember, this is a scalp. For a scalp, we're going to be in the trade as short as possible. So we want to just see which way is the daily momentum. Okay, if we get a reading that daily momentum's up, well, we want to take a piece of that. Okay, if we get a reading that daily momentum's down, that's fine. We don't mind, but we want to take a piece of that. So so that's what this is all about. Now take a look at the US 30. Which way is momentum going? It's going down. All right. So the idea here is this is a directional filter. Which way is momentum going? It would be an added bonus if we had a momentum down and we were in zone 3, because that would potentially be a trend. Okay, so we might not be trending now, but we're scalping. Okay, we're not swing trading, we're scalping. We just want to get as much as we can off of a momentum moving down. I just want to make sure, is everybody with me on that? Hey Ben, good day to you. Welcome. Okay, very nice to have you on the webinar again, Ben. Can I just get a basic yes or no if everybody's with me? Just because, again, it's a method in development. We can change it as we see fit, but I just want to make sure everybody's with me, right? So the idea here is we're getting a filter, a directional filter here, that we want to be looking for a scalp to the downside. Now, that's just part 1. We want to go through to part 2. Now, part 2 might disqualify the Dow Jones, and it probably will. So what's part 2? Okay. Now the zone analysis becomes a lot more important. Okay, where is the position? Now, we've jumped quite a few, we've jumped gigantically down in terms of time, going from a day, from 24 hours, we've gone to, we're looking at 1/24th, basically, of what we were looking at before. So it's now all of a sudden, because we are on a much smaller time scale, well, position now of candles becomes important. Okay, so yes, the daily we get the directional bias. Does the hourly complement that? Now, this is I think quite important in that this doesn't count. Okay, the fact that this candle is moving into zone 3 doesn't count, and the reason it doesn't count is because it's an active candle and we've got another 14 minutes left of trade. In other words, if there is some sort of support that comes in, this candle can actually close still in zone 2. So we're looking for the last candle which is this one. And where did it close? Well, it closed in zone 2. So zone 2 automatically is going to disqualify us. If it was in zone 1, it would disqualify us. What we're trying to do is we're trying to look where the position is and tie it into our directional filter on the daily. So we're looking for a close that would have been in zone 3. We don't have that. We might have it at the end of this hour, and then, well, then we can start doing our analysis again. But right now, we disqualified. So although this looks really good in terms of a downwards momentum, there's not much we can do with it. And if we take a look at the, let's go through to the S&P 500. And the S&P 500, again, perhaps not the best signal we've ever seen. It has turned down, so we'll run with that. Okay, we'll run with that. But the idea here is it's disqualified because we don't have an active, we don't have a closed candle in the right area. So immediately we've disqualified the Dow. Immediately we've disqualified the S&P. Let's take a look at NASDAQ. All right, and it looks to me NASDAQ is off the table as well. So we can, it doesn't really matter which direction this was going, because on the hourly, we're slap bang in the middle, and that's no good. So we're gonna expand the sort of, I guess, the instruments. By and large, we focus on these 3 indexes, but not exclusively. So the fact that these 3 don't offer opportunity at the moment, well, the next one we'll look at is the US 2000, which is the small companies, and let's see how the small companies is looking. All right, so again, it's disqualified. So, and the idea here is this, if we go short here, it might actually be a terrific trade. I don't know. It might be a terrific trade. But I guess the point I'd like to make is that when you have a trading plan and you've developed a trading plan and you've got kind of the boxes that you need to check before you go into a plan, well, don't override those, even if you are proven correct, because it opens up literally Pandora's box, because I hope that's the right sort of idiom, but because it might work once, it might work twice, but at some stage it's really going to hurt. So we'll just keep to the rules. So these have all been disqualified. Let's take a look at, we'll go down to currencies now. One other point to make is, because you are scalping, every point counts. Okay, every pip counts, and because every pip counts, we've got to make provision for the spread. So the way we do that, it's very easy, but it's often I often forget it, but I think it's quite important. Is you want to toggle between your buy and asks here. So if you are going to go long, if you're going to go long, you want to take a look at your ask price, because you buy at ask. Okay, you buy at ask, and as soon as you enter, you want to switch to bid, because you're going to sell at the bid. If you go short, you'll do it the other way around. You will keep it on bid first. Once you've entered short, you're going to switch it back to ask, and it's just going to help you see. It's going to show you why you may be negative when you think you're positive. It's because you're not taking the spread into account. So that's just something to keep in mind here. Yeah, so Peter's just brought up the point. We have power in 50 minutes, which makes risk. Exactly. So right at the beginning, Peter, I just said it's not the ideal day to be scalping. So on a real account, you certainly wouldn't be looking to scalp at this stage. But we'll just go through it. It's the demo, and I think there's a few new guys on the call, so I'll just go through it again. But your point is absolutely relevant. Is it worth being exposed at a time when volatility is going to be increased, and I would suggest dramatically increased, and I would suggest probably not. I mean, the market's always going to be there. We don't have to be participating in high risk calendar events. So Rob's asking, when is the ideal time? So my opinion here, Rob, is so with European markets, we tend to open at the top of the hour. Okay, so when the DAX opens, when the FTSE opens, even when the JSE opens, it's at the top of the hour. So you can wait kind of the first hour, maybe even the first 2 hours, just for the market to settle, and then start looking. But definitely, I would suggest, and I've always thought the first hour is a very foggy time for us to be looking to trade. With the US markets, it's slightly different. The US market is slightly different because that opens at the bottom of the hour. It opens on the half hour. So now, what do? And I think that prudence suggests we wait the full hour and a half. And I think that's when we kind of start looking and the market's settled, with, of course, making sure what the calendar has lined up for the day. So I would suggest just getting that first sort of all the EAs, all the algos, all the limit orders, let that all clear, you know, and then see which way the market starts sort of its direction. And of course, just because, say, the mid-morning is moving up doesn't necessarily mean we close on an up day, but I think it's just a little easier to get all the sort of algos out of the way. And Pete says it right, live to fight another day. Let's go through to euro and maybe pound, see how they're doing. Something else I wanted to mention with spread. Okay, so this one actually is potentially in play. Euro, let's take a look. This one's potentially in play. It's not a great chart by any means. You can see the volatility here. This is the daily, is completely sideways. I think this is probably about a change, you know, given the testimony. Is it mainly designed for indexes? When we first designed it, Rob, it was certainly built around the indexes, but we have had a number of trades put on which have worked out quite nicely on currencies. Where it's perhaps faulted, is, I think I once put on a trade on silver. I think it was silver, and the problem is that the spread on silver is too wide, really, for the scalp. Well, I thought it was too wide for the scalp. I don't like even sort of exotic currencies. I generally avoid them because I don't like the wide spreads. The idea is that the wider the spread, the more volatile the instrument. You should cover your spread fairly quickly, but psychologically, I've never been comfortable with a wide spread. And I seem to recall putting on, I think it was silver, and right as soon as I put it on, I thought, oh no, this is going to be a losing trade because I've got to cover the spread. And so there's that caveat as well. But it was designed around indexes. But I think that the thinking behind it would apply to any sort of liquid market. That's my opinion. Let's just see. We've only described the first two screens. This screen over here is probably sort of the most important one. I'm going to come to that in a moment. I just want to see if we can find something that's sort of all right, so pound is under a bit of pressure. Let's just focus on pound for the time being. All right, so let's start from the top and work our way down. Tight spreads allow us your stop. Let me just tight spreads allow you get stopped out too soon. I think that's what you've written there, Pete. So yeah, we can probably improve on our stop placement strategy, but we'll discuss that here. So just taking a look at pound, so you can see that the directional bias is to the downside, and we've got a close that's in zone 3, and then this again is an hourly, it's a 5-period stochastic. If it's under 50 here, I think would be okay. So then we've got a downwards sort of a downwards bias. The momentum's downward biased. The momentum's biased downwards. I beg your pardon. We're in zone 3, and then the momentum being under 50 here is on the bearish side. So I'm okay with that. I'm okay with that. The next part of the scalp would be, well, now this is where we've kind of got to decide, are we going to get in or not? This is really the timing mechanism. Now, there's actually there's two entry methods here. Okay, there's two methods here. One of them is based on a pullback, and one of them is based on momentum. So we've got two opportunities to potentially enter here. And each method is characterized by a different indicator. So we've got a RSI over here. I'm going to talk about that in a moment. And we've got a stochastic here. Now this stochastic, we're back to the 1555, and it's a slow. Okay, it's a slow. So it's not the same as the fast stochastic. This is now a completely different indicator. This is now 1555. I've taken out the %D. Okay, we don't need the %D, but it's a slow stochastic. On the daily, that's a fast stochastic. On the hourly, that's a fast stochastic. On the 5-minute, this is a slow stochastic. Okay, now take a look at, let's deal with the stochastic second. Let's deal with the RSI first, because the RSI actually was the when we first sort of were working on the methodology, we didn't have the stochastic. That was a later addition. We only were working on the RSI, and this RSI is a strange RSI. Look how we've got this. The number of periods is 2. So if you read a textbook on technical analysis, you know that the default number is 14. When we do our regular webinars, we use around a 10. Well, this, we're using a 2, okay? So we've gone right in. Why are we going right in? Is because it's a scalp, right? Now, I've also changed the data source. Usually the RSI, the 14 that you guys would read in a textbook, is calculated off of the close, okay? What we use in our morning webinar, we use a median, okay? Whilst I was developing this, I actually felt that the signals on the weighted looked pretty good. I don't think that it gives too much of an advantage, but we've been using this now for about sort of 10 months. It hasn't changed. So weighted and 2, okay? And take a look at the overbought, oversold levels. Again, we tend to use 80 and 20, but not on this one. On this one, we're using a 2 and we're using 70 and 30. In other words, the signal is going to be much earlier. And what we're looking for here is the opportunity to get in on a pullback. So let's talk about the pound. We're going to come back to this in a moment. We've got directional bias down on the daily. We've got the position in zone 3. We're below 50, okay? Can we enter? Well, now, what we're trying to do is we're using this as a sort of a trigger, and or a hammer, call it sort of a gun hammer. So you're kind of cocking the gun hammer. Because we're looking to go short, as soon as it pulls back above 50, okay, well, there's the pullback that we're looking to get in. Now, typically, because this is a 2 period, look how it doesn't spend much time, okay, above 50. I mean, it can, depending on the trend, but we know that the higher timeframes are suggesting downside weakness. So we've got this pullback over here. Does everyone understand up until that point? Okay, so here's the pullback, and we're going to try and exploit this. We want to go short because of the upper timeframes. But now, how do we enter? And this is where we are going to use our reversal candles. Okay, so now we're going to use reversal candles. Now, I think this part, adding reversal candles as the trigger mechanism, in my opinion, is really kind of the secret here. Okay, because I don't know where this swing is going to end. I don't know where it's going to end. So what we do is we put a little arrow here. Now we could get another candle, and these are 5-minute candles. I've got we're counting down 2 minutes 70. We can get another candle that moves up. So then we would move the arrow up, and would move this up, and would move this up. In other words, we're now stalking the entry. We're not just entering, we're stalking the entry. Okay, we're trying to get this as accurate as possible. Now, the way that it's going to have to trigger is something like this. So we'll need a candle like this. So we'll need some sort. So we'll need the 3 conditions. Condition 1, we would need the highest high. Condition 2, we'll need price to take out the reference candles low. And condition 3, we need a close below. Once we've got that, we can put on the short, and we'll put in a stop loss. And the stop loss is, we'll probably put it, I would put it about here. So this looks like a nice sort of, it's got this support, this support, this support to protect it. But it all depends on, can we get in? Okay, now we'll just keep monitoring this. I just want to stop there. Does everyone kind of follow what we've discussed so far? We haven't been given the opportunity to put on the trade yet. But does everyone follow? Can I just get a Y or an N? Just to let you know, I just want to take a look, see what's happening on the US markets, incidentally, because it's after the testimonies about to start, but I think the volatility probably still is yet to come. Okay, cool. So the idea here is we've got 9 seconds. Okay, so take a look here. 9 seconds, we'll get another candle. But we don't have any entry criteria just yet. Okay, so here you can see that, in fact, it's making high highs, high lows. So we can't, we're going to have to use this as the reference candle now, but we're going to have to wait for this candle to complete. So we'll kind of move this over here. And now we've got to be patient. So we've got to wait at least 10 minutes to see if we can enter, because we've got to get this candle completed, and we've got to get the next candle completed, and we need those 3 conditions. Now, I'm going to talk about the, okay, cool, Rob. I just want to talk now about the stochastic, which would be a different methodology. So let's just go here. Let me just see. We'll go here for the time being. All right, so let's just assume that we wanted to go short here. Just assume we wanted to go short. In other words, the daily chart gave us the directional bias down. The hourly chart confirmed the daily chart, but there was no pullback. Let's just say that the market was actually moving down with quite a strong momentum. But that's cool, and I think this would be a good time to probably take a short, but I'm going to use the stochastic. So I would enter short when the stochastic breaks below 20. Not as it hits 20. We've got to wait for the candle to close, and if the candle closes with the stochastic below 20, then we can go ahead and put on a short. Okay, and then we've got to be very strict here. We will put in a stop loss, but we would also use the stochastic as a stop loss because it's a momentum trade. So if the stochastic pops out from under the 80 area, if it pops up from the 20 area, would have to stop the trade because the momentum that we're trying to catch hasn't built. But then we can get the chance to re-enter here. So that's kind of the other methodology. It's to try and get momentum, and just trying to find a good example. Just to see here, assuming the other triggers gave us the directional bias to go up. So if we entered there, potentially kind of get out there for the scalp. Let's just see what's happening here. All right, now we're in a bit of trouble here because you can see what's happening with this is now this is the testimony. Take a look what's happening to the pound US dollar. So the US dollar is weakening. So if I had to go to the US dollar here, we'll see the US dollar being pushed right down. And I would suspect this is because of the testimony, which is exactly what Pete said. He said, right, you want to go in now? It's high risk. Well, that high risk is playing out because we were looking to go short. And of course, we haven't got the opportunity because the markets would be moving against us. So right there is the perfect reason why you don't want to put on a scalp in these high risk areas. And of course, Jerome Powell is going to be questioned. So let's just assume that he answers a question and the market reacts by meeting our criteria, and we go short. It all looks good. And then the next question comes and the market doesn't like that, and then it moves against us. We get stopped out. So there's the risk right there. So you can see, look at the lengthening candles, how just over the last few minutes there has been much more emotion in terms of the candlesticks, much longer. So we wouldn't put on a trade now with a real account. It's not the right time, and you can clearly see why. Let's just go back to the US 30. I want to just see something here on the US 30. So now with the US 30, we have got the direction down. We go to the hourly. Well, we can now start looking for short positions because this is now a closed candle and it's closed in zone 3 and we're below 50. Okay, so now we can go down here and let's just zoom in and take a look. We've got a pullback over here, and we're pretty good in terms of momentum, right? But we've got a pullback over here, so let's put this on over here. And what we can do now is we can see if we can get involved. So we'll put this and let's put in the arrow. And you can see here is condition 1. It's the highest high in at least 3 candles. We're waiting for conditions 2 and 3. We've still got 4 minutes 25. Okay, so I don't know, excuse me, I don't know if this is going to take out this reference candle or not, but we'll keep an eye on this. This one we can perhaps put on as a practice trade. All right, let's just keep an eye on that. Okay, so you can see that the market's tending towards weakness. Perhaps the Fed chair is saying something about higher rates. I'm not sure, and the market getting pushed down because of that. But of course, you know, again, I want to reiterate, we don't know what's going to be asked. We don't know how he's going to answer it. We don't know what the market is going to do with those answers. So it's probably worth just sitting out until something like that is done with. All right, but we'll keep an eye on this. We've got another 328. Any questions now go ahead and type those through. Any questions? Go ahead, type this through. I'm just waiting for this candle to complete, and hopefully we'll put on a trade, and we'll put in the stop about there. And then the next thing, once we've got the trade on, our next goal is to try and get that stop down to break even as quickly as possible. Peter's like, if only we could see Powell's trades. Yeah, I'm pretty sure they shorted the Nasdaq last week, Pete. No, scrap that. I'm not sure of that. I say that in jest. All right. So just to give you, if you take a look at the Nasdaq, let's take a look. Maybe it's no, that's a surprise. It's moving up. But if you take a look at the Nasdaq from the 5th, around about there, that's probably where the shorts are put in. All right, let's go back to that US 30. Okay, I'm going to go back to cable just to see how cable's behaving as well. So those were the two that we're kind of following at the moment. Okay, so cable's also a potential, right? We've got another 1 minute and 30 seconds here. All right, another 46 seconds, so to speak. Yes, certainly. So the zones, this would be 20 and 2, the reds, 20 and 2, and the blue is 28 and 0.75. Okay, so at the moment, we can't enter here because we don't have conditions 2 and 3. And the reason that we can't enter is to keep us out of trouble. So if I'd gone short without conditions 2 and 3, it's premature. We may get this kicking up. Okay, so but we'll keep an eye on this. Let's take a look at the cable. All right, so we might put a cable on. Again, I want to just reiterate, it's not the ideal time now. There's a very important testimony going on right now. It's the ratification of the Fed chair. I mean, everybody should stay out of the market until that's completed. So this is just pure educational, this trade, please. And then from tomorrow, we'll be a little bit more serious about it. Okay, so we've got 4 minutes. So now we've got condition 2 here on cable. Do we get condition 3? Okay. Let's take a look at the US 30. It's interesting. It's sort of popping up here, but there's some resistance coming in. Let's just go down to the US 30. stochastic on the daily and the hourly. So Rob, it's a fast stochastic. Just make sure that you putting on the fast stochastic. So it's SFK, right? Stochastic fast. We've got 5. This is actually this one over here. It doesn't really matter what you put on for %D because you want to make that invisible. Okay, but for %K, you want 5, and similar for the hourly. Okay. Okay, so we're still not happening on the US city. I'm going to go back to cable to see if that's cooperating. All right, so the trend's not catching. I think again a function of the questioning or the testimony that's taking place in Washington right now. So we've got now 2 minutes 25. Let's see how this candle closes. Okay, now watch this. Watch this. Can you see where? Can you see that this just took out this high here? You guys see that? So this becomes the reference. So we kind of stalking the entry. Okay, we're stalking the entry. So now this falls away. It's got nothing to do with the trade. It's now all about, do we get some sort of turning point here? Okay, let's go back to pound US dollar. Okay, we've got 1 minute 30. Let's just see if we can get the market to cooperate here. This needs to close below this horizontal. Again, I think it's very much depending on what's being said. We've got 47 seconds here. The stochastic on the day and the hour is the same. Yeah. Yeah, so it would be a 5 period fast stochastic. All right, so we're going to miss out here again. It looks like we've got 4 seconds. I don't think we're going to. Okay, so it's kind of keeping us out of trouble at the moment. So we haven't committed. I'm going to just take a look at the US 30, and I think we may just sort of conclude at this point because we haven't really had the opportunity, and that's fine. I think we've done a fairly good job in laying out the sort of foundations of the system. Yeah, so I think we're going to have to skip the trade for today. We just haven't had the entry opportunity, unfortunately. So just before we conclude, any final questions? Anything that you guys want to ask? Go ahead and ask. Again, remember that it's in development still. I wouldn't say that we've signed off that this is the system at all. The US stayed above yesterday's low. Are you talking on the daily there? Yeah. Okay. So Peter's just saying, look, the current price is, well, this is an inside period, isn't it? So today's high is below yesterday's high, but at the same time, today's low is higher than yesterday's low. So so far it's a day of indecision. It's a day of indecision. So this might clear up after the testimony ends, but right now certainly the market theme that we discussed this morning about that uncertainty, I think is prevalent here as well. Yeah, so Rob's just asking if we can run through some past examples. I don't have a recorded session. There are recorded sessions, I think, somewhere in the archives, but we can kind of infer. We'll make inferences. So if we take a look, say, at the US 30 over here, so just to give you an idea, right, let's just put in a horizontal here. So you can see that the daily chart here starts kicking down. So now the directional bias is down. Again, I want to say, look, this is in hindsight. Everything's easy in hindsight. It's much harder at the right-hand side. But just to sort of drive home the system. So anywhere kind of over here, we're pointing down. Let's just put the horizontal in here, because then we've got a marker. And let's see if it's still here. It's not here, okay. So this is the 4th of Jan. Okay, so all of this now is after the 4th of Jan. So you can see here, this is kind of the 7th. So over here, we have just, this looks like the most obvious kind of place to sort of draw the sample from. So you've got a trend here. You've got the candles in zone 3, and of course you've got the stochastic below 50. Okay, so now we'll go through to our 5 minutes. So this is now on the 10th. So we're looking yesterday around about 2 p.m. Let's see. So we'll go down to the 5 minute. Let me just read it this way. All right, so we're over here. Okay, so we want to highlight. We want to kind of highlight this area here. So this is the area we're looking at. Okay, again, very easy in hindsight, much more difficult in real time. But the idea here is we've got two things happening here. So the first methodology would be a pullback over here. Okay, I'll just go into this area here. So, oh no, I just lost it. What happened there? Okay, so we're over here. So I think let's put in our arrow. Again, Rob, it's easy because it's in hindsight, but what you would be doing is looking for price to take out that reference candle, and there it would go down, and we would put the stop above us, and then we'll start trailing it down. But I want to do that live with you guys. So that would be the first entry. Let's say we missed that. Let's say we missed that. Well, then the next chance we would get would be to catch the momentum, which would be around about there. It would actually be 1 over. So we would probably get in on this candle here, probably get in over here, because we'd need this candle to complete. And then we would either trail down the stop loss, or we would exit over here. Okay, so you'd kind of take this area here. That's kind of the scalp there. based on your stochastic. Again, it's looking in hindsight. You know, your win rate's 100% in hindsight. It's much harder on the right hand side of the screen, but that's effectively what we're trying to do. But the real, I think, interesting part is once the trend's on, the stop loss, how we want to kind of move with the stop loss. But we'll do that tomorrow. Does that help there, Rob? All right. Any questions? On the second example, you're locking the stochastic below 20. Yes. So once it hits 20 and below, which is actually a good point. Perhaps it would work better if you use 30 as the. I'm not sure if I've actually thought of that. Maybe 30 would be the more appropriate for this type of methodology. But at the moment, it's the 20 area that is marked in here. Alrighty, guys, let's wrap up here, and then we'll do it all again tomorrow. Thank you very much for joining me this afternoon. I'm afraid we just didn't have the opportunity to get in, but I'm kind of glad because it's not the best time to do it, but we had a really good overview of the system. Thanks very much, guys. Have a terrific night, evening ahead of you.